Hello, Face. Hi, everybody. Hope everyone's doing okay. I want to welcome our viewers from investing.com. I want to let everyone know that we have a very popular teacher, mentor, analyst who's going to be talking about crypto and FX at the top of the hour. I want to start off with the euro right here. And long term, I'm bearish. I actually have a line that where I think we can go to before we have any type of intermediate potential low, and it's all the way down here. It actually projects into the gap where Macron won, and we had this huge level. But, you know, nothing goes straight up, straight down. It's a long and winding road to long-term objectives. Anyone who's traded for a while knows that. And when I look at the euro right here, DSI on it is low 20s, meaning everyone hates it. So I'm not looking for the beginning of a bull market in the euro, but I can say this, a little bit underneath 78.6 of this pop that we had before the recent sell-off. We do have some divergence on the 4 hour, on the 1 hour. Also on the 4, it's not confirming. And if you notice, there's some confluence up here, 1320. So for, you know, scalp or swing trade, I'm in here risking 60 pips, anticipating the potential of a reversal. Not the best habit to anticipate, but you know, I've been doing it long enough to drive my car that way. And if we start trading back over 1260, which is 30 pips above here, you could tell from shorter term moving averages, that's going to be an important level. As you can see, it's also was an important level when trying to bounce yesterday. So back over 1260. Again, I'm only looking for 1320. You take it a step at a time. We start getting through 1320, then something else is happening. But for now, I think there's a possibility that this scenario occurs. I was a big crude bear, and you know, I've talked to people about my work and what prevented me from shorting it up here, even though this was a pretty classic stop hunt up here where we just made new highs with no follow through. This kept me out of it. Okay, so sometimes your work and your discipline is going to keep you out. I needed to see one more high without a confirmed high on momentum. So we'll see. Maybe this still is 1, 2, 3, and there's another shot coming. I actually think a weaker dollar would be supportive for equities. And when we were on last week, I believe Blake and I did, and Steve was on vacation, but we're up here. And in fact, it was right here last Thursday. And, you know, it looked like all clear, and we were warning about, you know, way overdue. It wasn't confirming at new highs on many different time frames. There was a lot of divergence at this high last Friday, and Thursday and Friday we had the big sell-off. The market's trying to recover, and I think actually it has a chance to do so. I know some people looking for a new retest of the high, so you had this, and then we rallied and we sold off yesterday. The big number, and I had a guess that followed dark pool transactions. If you don't know what a dark pool is, it's not when you go skinny dipping at night with all the lights out in your backyard. It's where all the big players, and I do believe most viewers that are in investing.com, since stocks are your bailiwick, you want to know where the big money's going, and big money can do things in dark pools. The advantage for them to do it is they don't have to report it for 24 hours, any trades they do. So it gives them anonymity, and without people trying to front run them and coattail them. And God, I remember on the floor, traders with big reputations, you know, if they came down into the pit and started buying, everyone would coattail them and start buying. So a lot of the smart guys would put on positions upstairs in their offices and say, for example, they were short, and they'd come in and they'd sell a little in the pit, but they were already short, and everyone else starts to sell the market, and all of a sudden they're covering. So, you know, dark pools are, I think if you're going to be a stock trader, it's kind of like option traders that follow size. You get a huge bet in options, 5,000 contracts on a print, when normally they only do that amount in any particular strike in a week, and it happens in a day. It's a pretty good market tell. So we have to take our messages and look beneath the surface of just staring at a candlestick, a bar, a Ranko, whatever it is. So we'll see what happens here in the S&Ps. Sometimes there's strength into month end, so we're approaching that. We'll see. But anyway, the guest that I had, Stephanie, as dark pool, she saw prints in the SPY at 275. So we almost got there. We got, this is futures 278.80, yesterday's low. So under these lows, there's a continuation of the correction. So the next couple days will show, can they generate another sell-off? I think what would be helpful, I showed you the euro, is that the market really doesn't like a strong dollar. So if we could get some type of dollar correction, I'm short from 91 and short from 14, looking for a pullback. We had a great chart of the day yesterday. You have to follow Blake's work, and it's free. I knew a guy, I used to sing karaoke a lot, and his expression was, if it's free, it's me. Anyone else like that in here? I mean, this is a free webinar. If it's free, it's me. Is this webinar? No, we cover Viraju. We also do cover, if you're interested, you could ask Steve. He does a lot of, Paul, that's you? Well, you're brave and honest, so that's all I could say. So, yes, we do cover some of the Indian markets. I know Steve Bolge pays attention to it, but it's not strictly about it. Oh, Simon, thank you so much. Sure. Craig, too. Simon says it may be free, but it's, dollar XXX value. So I agree with you. I really do. I've been around for a while, a few years in the industry, and it's the best team I've ever been part of. So let me get to the pitch. Sign up. Risk a buck. If you don't like the 10 days and you don't think you got anything out of it, I'll refund it to you. I'll send it via mail, postage due. So $1, you get 10 days to go over our whole platform, including the dashboard with all kinds of different analysis by some of the best practitioners in the industry. So you find a better team, let me know about them, and I want to interview them. So we really have an excellent team. And as you can see, any instrument you want to cover. Also, we put out patterns in play, which give you guidelines for certain type of trades. Blake was there for what happened in New Zealand with the central bank, and very nice gain there. Greg is one of the best Elliott Wave guys. What's he doing here? He's bearish. He's selling rallies. So you see, you could get guidelines. You don't have to hold these pattern in plays. You can trade around them, take partial profits, but they do give you your line in the sand, because as traders, as Blake says, really the only thing we can do is we can't make a market move in our direction. The only thing we can do is control the risk of the position that we put on. So you do get the invalidation similar to where you should consider having a stop or getting out of the way. Blake cleaning up again on DAX, and Greg correction and downside short gold. That's really been working the last couple of days. So as you can see, most subscriptions are $100 or so a month. Just one Kiwi. Okay, one Kiwi from when Blake was talking about it, more than paid for your subscription, just a one lot. Okay, someone has no volume, but I can't help them. Someone may want to tell them to log out, log back in. So is there anything else I want to talk about in the market? It's, see, S&P, see, they heard me, and the dollar's coming off. So I've tried this, and I do teach a course in it. All you viewers at investing.com, I'm giving this away for free. You know how people say I have the secret of trading. So I'm short Dixie here, stops up here. So what you do is you put your cursor over the candle, and then you just start to drag it down in the direction you want to go with. I've seen people use magnets. I'm just kidding. None of that works. So it's called the cursor technique because you end up cursing at the candle. So Blake, how are you, buddy? That's the end of my stand-up routine.
Good. How you doing?
Good, bro. Great trading by the team this week.
Yeah, it's still, well, remember, we still have a couple of days, so we gotta see what happens here.
God, I thought it was TGIF.
No, we are so close, though. We are really, really close. Not there yet, but anyway, so there's been a little bit of news this morning with Deutsche Bank. Looks like Deutsche Bank's going to be raising some money, and that's scary. The market's didn't like that. The euro slumped to lows. We are very divergent. I'm a little nervous being, well, I've got a little euro yen short, just a little bit, not a big piece. I was looking to short a little bit more on a rally overnight. You can see the bear flag pattern. I had an order at 50, and we went as high as 35, so it didn't trip my excess. But you can see we're really on key support here in the euro yen. But the euro dollar came under pressure, following this Deutsche Bank news that they're looking to raise some money. And Jack was in our chat room. He's like, who's gonna give them money? I'm like, well, the ECB, Germany. There's going to be a lot of, you're going to have,
maybe our Treasury will, Blake. I mean, they were the major lender to the Trump organization.
Well, it's the thing is that is Deutsche Bank too big to fail? Do we have another Lehman type of moment? And or does the market allow for a Lehman type of moment? I would think not. So
they say they have the biggest derivatives book in the universe.
Yeah, so you got to think about what a cascading event would be like with an institution like Deutsche Bank, and you can see how the market is gonna think there is no friggin' way we are gonna allow for anything bad to happen to Deutsche Bank. So, but does that? I don't know. All I know is if you're long the euro, it's a little scary. But from a technical.
Don't forget they're going to merge with Commerzbank as well.
Oh, of course, that's two crap banks put into one, which is awesome. Yeah. It's like when Sears bought Kmart. That's great. That works. Obviously, it didn't. But Stelios, what are your thoughts about Deutsche Bank?
Well, I think Dale is right when he said they have the biggest derivatives exposure. I remember when I was a market maker in London years ago, their guys were the biggest by a mile in pretty much everything. So it's very scary to think about what's going to happen if there is some kind of an event. I remember myself in 2008, we were spending weekends doing scenarios. What if tomorrow, RBS fails, this happens? What if this bank fails? That's going to happen to the book and all that. So Deutsche being the biggest, out of all the European banks, for sure the biggest one, it's going to create a huge ripple event. So in my opinion, there's no way they're going to let Deutsche.
Yeah, there's no way. So no way. But how can things precipitously get worse? For Deutsche Bank, and I've looked at the stock in forever, but oh my God, that's like the march of death, right?
Yeah. If you look at the weekly chart, it's or a monthly chart.
I obviously drew a trend line at some point, I guess, back in 2016, apparently. Thinking, oh, maybe this is the place to be along. I don't know what I was thinking at that moment. I'll get rid of the trend line, but man, that's the inevitable march of death. So what happens? What happens with Deutsche Bank? I don't know. But it's scary. It's scary. What could it do to the euro? Well, I think the thing that I look at the euro. I read a piece. I think I was saying to you guys yesterday. I read a piece from R.J. O'Brien, who they were writing about the euros, poised for a turn with the divergence and relative strength. And there's a lot of divergences, not just in relative strength, but in other technical levels. But frankly, let me go to the weekly chart really quick, and let me just show you something. Okay, you look at this weekly chart and tell me right now that you're looking at this weekly chart saying that we cannot see lower levels in the euro. You tell me that relative strength is divergent, which it is, but divergent relative strength it only works until you reset. But once you reset, what happens? Like, what is the potential here with relative strength from here on a weekly basis for the euro? Well, I'll tell you what happens. Price goes down, relative strength breaks down, and then we have a confirmation move. So if you don't think that the euro dollar can go lower from current levels, you're crazy. Are we seeing divergence now? Yeah, we are. Does that mean that that's going to stick? No, it doesn't. We could very easily see 110 and see the relative strength break to new lows very easily. So, for those of you that are like, no, it ain't gonna happen. I don't know, it can happen. And Dale was talking about my chart of the day yesterday. And if you guys don't know how to get that, just go to ForexAnalytix.com, and you'll be here, right? You get here and make sure you watch our little video, the demo. But then go over to blog where it says the chart of the day. I try to post something every day. I'm usually there. Yesterday, chart of the day was the dollar index, and the dollar index, I just pointed out, hey, we are in a bullish wedge. We're going higher. We're at the 618. Very tempting to short it. I told you guys it'd be very tempting traders to have the urge to sell strength. However, the longer term picture shows higher lows and a consistent highs, which is a bullish wedge. That's a higher lows, consistent highs is a bullish wedge. Okay. And that risk is the dollar index continues higher, and we are now above the 618 retracement, and we are approaching trend highs. And frankly, the dollar index, becomes a safe haven type of currency under, situations of duress. And if we have a Deutsche Bank issue, you get kind of double whammy as people exit the euro and look for dollars for safety, which puts the euro a lot lower than where we're currently at. So, I think those are the risks with the euro. Let's talk about a couple other pairs really quick before I turn it over to Steve. The cable. The cable is at triangle support. I would call this triangle support right here at the 618 retracement 3105. We break below 131, and that can expose a move. This is the 38% retracements where we stopped previously, but we break through 131. We could see 130 again pretty easily, I think, in the cable. I don't have any pound exposure. I'm just letting you guys know. The Aussie dollar, still in our wedge, longer term, right? Still in our wedge. 70 cents is key. Kiwi dollars consolidating recent losses, but 38% retracement can't even be tested. We break through this triangle support, and we are going lower. When I say we're going lower, we're probably going to 67 cents, maybe even 65 or 66. We're so on the Kiwi dollar, you got to watch through the support. It's been weak. All we're doing is consolidating recent losses. The dollar Canadian, we're in a bull flag pattern, and a break above 134.50 would be extremely bullish. And I don't know why I don't have an alarm set there. I should. Now I do. Let me go back. So dollar Canadian above 134.50 is extremely bullish. Then we're working this big longer term inverted head and shoulder pattern that eventually points to 136. So just think about that if you guys are out there shorting the Canadian. Dollar MEX. Let's talk a little bit about the dollar MEX. So we're probing some pretty key resistance here. It's a major trend line. Let me grab this line here. There's a major trend line. Okay, we had a false breakdown. We've been talking about it all week. Talked about it on the week ahead video. False breakdown, lead to a reversal. We got it. Now here we are. Does anybody, and I'm going to ask you guys at home or in your office or wherever you're at, but are listening in, does anybody know what's happening today with Mexico? Anybody? Bueller. Yeah, it's a
Fiestas are being made illegal.
It's yes, no, right, no, that now if that happened in Europe, we'd have a problem. I'd have a problem too. We have a rate decision now. That happens at 3 p.m. Eastern. So wherever you're at, whatever that means for you, it's at 12 o'clock my time. So what time is it here? It's 5:20 in the morning. So it's, it's in 6.5 hours or whatever. So Mexico is expected to be relatively hawkish, but think about what happened with New Zealand and the RBNZ this week. If Mexico starts citing the global economic slowdown, and they start to become a little bit more dovish, we could be trading in the US dollar Mexican peso up here 1960 pretty easily, and then up to 1985. So for those of you that are bearish the dollar Mex, just remember that at 3 o'clock Eastern, 3 p.m. Eastern, Mexico will meet, and I think the risk is because you look at the big green bars here. You know what I always say, big green bars are usually followed by more big green bars. Same thing with big red bars. So if you got a big red bar, it's usually followed by other big red bars. So I'd be really careful being short the dollar Mex. Now, one of the other things that could actually spike it higher is obviously some risk aversion. We could see, a continuation move higher. This is and you look at this being a false breakdown below 19. It was a really big deal. I mean, because if you go to the dollar Mex and you look at like a weekly chart, we're just at triangle support. So triangle support, false breakdown on a weekly basis, pin bar, hammer. It's given us a bullish, move, which would be expected. So, I think the risks here are that the U.S. dollar Mexican peso continues higher. I'm not trading it at the moment, but that's what I'm looking at. Let's see. I'm staying away from the Turkish lira. There's all sorts of Eurowan, however you pronounce his name. He's gone off he's batshit crazy. So then excuse the language. Sorry, kids, earmuffs. The dollar yen. The dollar yen is outside of a channel. We stopped at the 618, which is 109.85. We're bouncing a little bit here, but I think while we trade below 110.60, which here let's delete.
And didn't the BOJ do something last night, Blake? I don't know. Skype. I think they lowered something by 0.25 bips or something.
Yeah, no, I don't think so. But what I would be worried about right now is seasonality with the yen. And we are at the fiscal year end right now. This is the fiscal year end for Japan, and so typically you get a lot of repatriation flows back into the yen. So I wouldn't want to be short yen right now. And just from a seasonality standpoint, and then you take a look at, like I pointed out the euro yen here. Excuse me, the euro yen. It's really key support. We talked about, or I sent a tweet out, but you can see how that actually points to 122. But you got seasonal flows that are pushing the yen higher, which the dollar yen came under pressure earlier this week. We've bounced a little bit, but I think while we're below 110.65, 110.70, you got to think that there's more downside. So, and again, if we get some risk aversion, it's just going to accelerate things lower. So, just some thoughts regarding the yen. I'm not gonna take away from Steve. I know he's chomping at the bit to talk about gold. So let me give you the downside targets in gold. I'm just kidding. I'm joking, Steve. But Steve called on Real Vision that he's looking for near-term gold weakness, and looks like we're getting it. So Steve, how's it going this morning?
Good, mate. I've been good. How have you been?
Good. Can I talk about gold now? Just kidding.
Absolutely.
I'm just kidding. No, I'm joking. I'm joking. I want you to go ahead and kind of review for the investing viewers. And before you say anything, just want to let everybody know that Steve, while he was in New York for the Trade Expo with Grego Horvat and Joe Perry, that was on Bloomberg yesterday, Steve was on Real Vision a couple of different times the last couple of weeks while he made his way to New York. So you guys will have Steve here for the next 30 minutes, and he'll talk about some of these developments. Go ahead, Steve.
The highlight, Blake, is not gold. Have you seen palladium?
No, I haven't. But I haven't seen it. But I won't steal your thunder. So, but all I know is the DSI readings for palladium a couple weeks back were off the chart. So maybe we got a big reversal. I haven't seen it. It's not something that I follow typically.
More than $200 of a plunge within like 5 trading days. How does that sound?
Wow, that's crazy. All right, well, I'm going to pass you over the charts, and guys and gals, if you haven't visited our sponsor, Forest Park FX, make sure you do so, because if you want to be part of the ForexAnalytix community and you want to get some of that subsidized for you, if you at the $100 a month or whatever, or depending on what plan you go for, Forest Park FX can help you reimburse you for that for your ForexAnalytix subscription through your trading. So make sure you visit our sponsors, Forest Park FX. All right, Steve, Stelios, Coach, it's all yours.
Thank you, Blake. Have a wonderful day.
Look at that palladium move.
Yeah.
Good hunting, Blake.
Thanks, man.
Look at this technical break, and something. As usually, I mean, I love those kind of things. I was reading between here and here. I had read like 5-6 different articles,
bullish,
talking about how palladium is squeezing everybody out. How palladium is has no ceiling, et cetera, et cetera. The last one I read, which also had to do with squeezing the market out or something like that was the title, was here actually. And usually when something starts becoming so mainstream, this is what happens afterwards, right?
Yeah, great call, Steve. I saw someone, that looks at gold palladium spreads, and it's really gone, bananas with palladium's performance, and they're looking for, in the next couple of years, to give it all back.
Yeah, something, anyway. It has already given back almost 14% within 5 trading days.
Yeah, there you go. Yeah,
that's a decent amount for the days spent here, right? I mean, it sliced through this horizontal support area like it wasn't there at all. And as you understand, now everybody's running for the exit. You're going to be lucky, in my opinion, if we get a retest.
They're comparing that to gold, not just palladium dropping 14%. But so I guess what it means is, palladium is more economically sensitive than gold, right? So, I mean, if you get your recession call in the next year or so.
First of all, that's a given. I mean, one of them should act as a safe haven while the other one shouldn't. So there's no question about that. I mean, with risk of...
it's a given to a genius like you.
Gold, to be honest, what we haven't had a look at.
The gold, silver?
The gold... No, I'm looking at it on a daily basis, but this is the gold palladium, as you see, chart. Just look at this.
Yeah, he did it the other way around, but yeah, okay.
Yeah, it doesn't really matter, but look at this.
Steve, sorry to interrupt. We have GDP.
We have data, GDP data, yeah. Let's see what comes out. You're right. Last GDP one.
2.2 versus 2.4 expected, so lower than
expected. No surprise for me there. USD yen so far, not. Let's go down to the 4-hour chart. So,
Stel, did you hear anything about some type of rate drop in Japan?
USD yen not reacting really.
Don't actually follow Japanese government bonds because
Euro USD not reacting really. I mean, a little pullback in the dollar, but I mean, very, very minor, nothing to write home about. So the market doesn't seem to really care about the weaker data that we got, 2.2 versus 2.4. GDP price index, on the other hand, a little bit stronger. Initial jobless claims a little bit better, but you know,
who cares?
Nothing to write home about. I mean, 211 versus 220 expected. So the final GDP print for Stelio. Now that I think about it, now that we have the final GDP print for the fourth quarter, did we actually end up beating 3% year over year or not? Because I think that with the 2.2 print, we might have a...
Let's have a look. We have 2.2, 2.6, 3.4, 3.5. No, that's it. Sorry, that's not it. Oh no, this is the. Sorry, I'm talking about the wrong thing. This is the forecast of this. I have to check. I think we're very close, actually. I think we're very close to that.
We should be close, but we might have actually missed the 3% mark once again. And you know my opinion. Whatever the GDP print of 2018 will be, there is no way we're going over it before the next business cycle begins. So that's what I think. So I predict a lot worse 2019 GDP. I mean, already from seeing the estimates of quarter one, you don't need to even wonder if that's
like 1.3% or what is it? Something like that, 1.4.
I'll take the under if you don't mind about it.
Yeah, I agree actually. So,
I'll take the under. I wouldn't. I think it's going to be below 1 actually. So not a good start for the year for sure. Anyhow, as it seems, the market, regardless, the market is not really reacting to that. So we can go back to talking about charts. So, Coach, we were talking about, look at this beautiful RSI divergence here on the daily chart for gold palladium ratio, right? And look at this huge break that we got from this trend line. So I do think that we might have found like a very significant bottom here, right?
Can we see a weekly?
Absolutely. There you go.
Oh wow. Look at where it was. Yeah.
Look at where it was. It was at 5, right? In the midst of the financial crisis, it was at 5, and from 5, we actually dropped below 1. So you can understand that even a retracement of that, in combination with some kind of a risk-off environment, can really get this moving
back to 2.
To the upside. And you were talking about the gold-silver ratio before. Nice triangle here. We came in this triangle from the downside, so not a real surprise that we're breaking to the upside. So next resistance for the gold-silver ratio at 86.82. Previous
unless it's developing a right shoulder, which is still a possibility. Unless
but we've already lost symmetry in a big extent. We're almost at the previous.
Because the left shoulder only took a certain amount of time, and this one has taken more time.
Yeah, just look at this. And,
I see.
What am I doing? I tried to
close.
It's not a written in stone rule, but statistically speaking, when you start losing symmetry by quite a lot, the chances of this pattern play out, decrease substantially.
I learn something every day here, and I've been doing this for, I don't know, 3 years now.
That's.
I forgot the 0.
No, exactly.
All right.
So I do think that the path of least resistance remains higher. Now, going back to gold, beautiful rejection from exactly the area we were expecting. I mean, I scaled in. I talked about that exactly 2 weeks ago in Real Vision. I scaled in at 50% fib and 61.8% fib. We got rejected, from there, and now we're testing the first actual support near 1300. I think that if we breach the 1300 area as well, we're going to be on our way to the next downside objective, which is 1280. I intend to, to take some profits there, and below that we have 1265. Silver, unsurprisingly, we've talked about that, is underperforming somewhat gold. Also, the rebound here in silver looks clearly corrective. I mean, just compare this move lower that within just a few trading days we plunged from 1630 all the way down to below $15, and then it took us several days to retrace 50% of that, and now we seem to be going off track once again, which is not a surprise. Platinum a little bit unfazed, but still remaining in quite a bearish formation. Copper, on the other hand, is rebounding from this bull flag, but needless to say, if risk sours here, copper won't manage to hold this. Regardless, the bull case is still somewhat alive as long as this flag is holding, despite the break below 287. So let's see what's going to happen here, but definitely it's going to be in a big extent dependent on what risk does. Now, we have started seeing the first signs. We were talking about that of crude, probably reversing. As I said the other day, now we also have a very nice double top possibility, because we got rejected from the same area just above 60 for a second time. Now, what do we need to declare that we have a double top formation? We need a break below 57.90 for safety reasons, though, since we have these three highs here at 57.50. I would say that if you really want to have some confirmation, 57.40, 57.50, that's going to be the level that if we break below, we should see a continuation lower towards 54.50 to 55. So you can start scaling in probably below 57.90, but I would scale more heavily below 57.40. So if you want to jump a little bit the gun, probably you don't want to go in with a full position. Regardless, wait for confirmation, because we are about to retest these previous lows. So definitely selling right on support makes no sense. So to reiterate, break it below 57.90 first signal, break below 57.40 a second one, and I do think that after that there is no real support until we go below 55. So there's going to be a decent profit to be made, if you're a little bit patient and wait for confirmation. I think it's quite an interesting trade, and I think it has a very decent potential of working out. Now, let me also open the question box, because we often get ideas from there. Please talk about the Indian markets. Yeah, I'm going to do that at the end. ZAR, yeah. We have Zach saying ZAR interest rate decision as well, if you'd like to know. And thank you for reminding me, because I have to say that the USD ZAR, and then I'm going to go to the more popular ones, has already actually been making a move. Let's also see it on the daily chart. Here it is. We talked about this breakout when we were breaking out above this triangular formation. Then we got something like a bull flag. We're now breaking above that as well. The pair is currently testing the 61.8. But in all honesty, I have no clue what South Africa is going to do with its rate decision. But USD ZAR looks, quite healthy. I mean, it looks like it can easily move towards the highs once again. So I think that clearly, from a technical perspective, the path of least resistance remains higher. So I have no clue what's going to happen, but I like it to the upside. Turkish lira gone a little bit wild, as you see lately, 2 days down, then 1 day of indecision, today quite a lot higher. USD ruble rebounding from a nice channel, so maintains some some bullish prospect from there. And now I spoke about this the other day, about the USD Chinese yuan, that we would probably have a bullish breakout, and as it seems, we are getting one now. I think this is something to pay attention to, because we know how these markets can also affect risk. Perhaps we get a sniff of what's happening in the negotiations as well. One thing is for sure, we've broken above this formation, and I think that we can now easily move back towards 680 once again. Now, having to do with the popular ones, I know that Blake spoke about the Euro USD. I maintain the same opinion that I had several days ago, that the path of least resistance remains lower. 111.86 is the next downside support. Cable is barely holding this on this wedge support, so cable is in danger of actually breaking down. And if we also want to have a look at the gappy, the gappy also has spent several days consolidating, but I have to admit that it looks quite heavy to me here. And look at this nice confluence, triple confluence, the 50 daily moving average, the 200 daily moving average, and this descending channels previous resistance, all of them now acting as support at around this level. So this is quite a key area. I think that if we break below it, if we close below 144, let's say 20, we're probably going to be seeing more weakness from the gappy as well. Now, I spoke about this several days ago, the potential for upside for the USD NOK. I actually started a small position yesterday, just a quarter of a position, so it's nothing to write home about. When we pulled back a little bit at 864, I think 863 and something, I went in the market because we have a nice inverted head and shoulders formation on the 4-hour chart. Let's have a look at it here. There it is. So I do think that USD NOK, after retesting this key confluence of supports at 840 and rebounding, it looks really good to the upside, and especially if we get those levels I mentioned before breaking down in crude, USD NOK can easily accelerate to the upside and make a move towards the 9 figures. So I do think it's worth having some exposure here. And as you see from a technical perspective, not much different, but the USD SEC did the exact same thing. I mean, we had the big technical formation, a triangle in this case. We broke above it, we came down, we retested it, we rebounding from there. So definitely the bullish case remains alive and well. CAD yen, by the way, Blake showed USD CAD. I have nothing to add there. I mean, we've been seeing the same things. CAD yen also depreciating within a descending channel. Not so convincingly, I have to say. I mean, this can be interpreted in a corrective manner as well. So who knows? There might even be, more up and down price action like this. I definitely don't see impulsive characteristics yet to the downside. So for the time being, I'm staying away from it. The best trade here was playing the rejection of the confluence of the 200 daily moving average and the 61.8. We talked about that, when it was happening. Now I think that it's probably not a good idea getting involved. I wouldn't be able to find an appealing, risk reward. Now, Aussie remains in the middle of this formation, so nothing has changed. Kiwi, nice rejection, but so far, we haven't broken down. We've just been getting rejected from breaking higher, but we are unable to break down for the time being. Kiwi yen, I still have a position here. Striving to hold the 200 daily moving average. This is the last area of support. Actually, I think that if we do decisively, if we close actually on the daily below 75, we should see more downside. That's why I'm holding to this position. Anyhow, it's in profit. So I'm looking for more downside. Of course, for that to happen, I would want to see the USD yen be a little bit more helpful. So far, the USD yen has been holding at this area. The rebound doesn't look impulsive to me, but we might have another little leg higher before lower. I wouldn't rule that out. So, but I do believe that there's a decent chance that we're going to see more downside towards perhaps 109, even 108, 108.50. At least that's what I think about this market. Hi, could you please comment on the Euro Swiss? Yeah, absolutely. Nothing has changed in the Euro Swiss. Euro Swiss is at a very, very interesting juncture. It's barely holding. Here it is on the 4-hour chart. Let me also show you on the daily chart. So it's barely holding on this support area. Definitely, if we get some risk off, I do think that we're going to be breaking below 111.80. And if that happens, then I really see no real support area until we reach 110. So Euro Swiss, nice breakout opportunity as long as we actually close below 111.80. Otherwise, if you like it to the upside, this is the place you want to be long because the risk-reward ratio is there. But once this breaks, you don't want to be in the wrong side of the market. Although this is not a market that moves really fast, it usually moves slowly. But I'm pretty sure that a lot of stop losses, I mean, you know how the markets work. We've had this area holding already twice. So a lot of people that were going long definitely have their stop losses just below that area. And I do think that once we make it below there, if we do, we're going to start triggering those. And that on its own should be probably enough fuel for us to move further to the downside. Obviously, as long as, wrong pair. Obviously, as long as the Euro Swiss is under pressure, that means that the USD Swiss remains vulnerable for a move to the downside as long as the Euro USD decides to produce a rebound. So if the Euro USD decides to rebound once again from the 111.80 area and Euro Swiss remains under pressure, then we should see another move lower for the USD Swiss. So far, anyhow, from a technical perspective, this looks like a little bear flag. But if Euro USD is unable to catch a bid, then there's not much that the Swiss franc can do on its own against the USD here. Now, having to do with the DXY, a brief mention on this. I know that Blake already showed the bigger formation. Just on a shorter term formation, you can view this as an expanding triangle as well. Very nice confluence of resistances and previous highs. I mean, this is going to be the fourth time that we will actually be testing this area, 97.73. So I don't believe so much in quadruple tops. If we make it back to 97.73, the chances of a breakout to the upside become increase quite substantially. Until that happens, there is always the possibility that we're going to see some type of pullback. But as Blake showed before, we have a series of higher lows. So as I've been saying, irrespective of your long-term thesis, in the short to medium term, there seems to be no technical reason to fight the dollar because it's probably a battle that you have much higher chances of losing than anything else. So, I don't care what my fundamental thesis is, but I don't want to be putting my money where the market tells me that I wouldn't be putting my money, and price action is all that matters, right? Price action incorporates everything, including the fundamentals that the market cares about at that moment in time. Because yes, we know that very often the market ignores fundamental reality, fundamental truths that are very obvious for a period of time, but very often that period of time can be longer than you would expect, right? So as long as that's the case, you have to trust what price action tells you, what the charts are telling you, a lot more than anything else. And that's my thesis on the dollar. Let's see. Have you looked at the yen pairs, especially Kiwi yen and Aussie yen? We did look at the Kiwi yen. Let's have a look at the Aussie yen. Aussie yen, as you see, trapped within this formation. You can make both a bearish and a bullish case here, right? The bearish case is that we had a very impulsive move lower. We rebounded. We now see consolidation. We might resume the downside. Also, for the bearish case, we had, a big triangle here. Once we broke below it, we came up, we retested it multiple times, and, every single time we got rejected. So the path of least resistance remains lower. The RSI profile also shows what you would expect to see from a corrective move higher. So all that would tell me that, a breakdown is more likely than a move to the upside. On the other hand, this might prove to be a more complex correction, in which case you would expect another move to the upside before seeing the pair all over. Regardless, I think that as long as we remain below 80, you need to respect the downside as the main direction that the market has at the moment. So I think bearish until proven otherwise is the way to go here. Now, having to do with the Aussie Kiwi, we've already noted this nice break higher after finding a nice confluence of supports. I still believe that this should have more upside from here. A retest of 1038 is probably a nice buying opportunity, as we said yesterday, and nothing has changed in respect to that. Hi, would you talk about Euro NOK things? Yeah, actually, something, I can talk not only about Euro NOK, but also EuroCAD and Euro MXN, because they have something in common, especially the later two. First of all, as you see, nice rebound for the Euro NOK from this horizontal area of support. Also, keep in mind that if I zoom out, we're still holding this ascending trend line support. You can see that, this dates back to 2012. So, since we have an ascending trend line acting as support since 2012, there is no question where the trend is. The trend remains higher until proven otherwise. We've had a series of higher lows since 2012, and that's all I need to say about this. You need to keep respecting that. Okay. Now, EuroCAD also rebounded after retesting this, broken wedges resistance and support. So, so far, so good. It's not a big mover though, so I wouldn't be actually looking to get a position there. But Euro MXN, on the other hand, much more interesting, because this was a triangle. I was expecting that, as with the USD MXN, a push to new lows. It happened in both cases. I mean, we did have a new low both in the USD MXN and to Euro MXN, although incremental in the case of Euro MXN. But notice this nice rebound that we're getting once again from a very strong horizontal support area, as you see, roughly at 2140. Let's see what happens from here, because we're currently retesting the broken triangle support as resistance. If we get rejected from here, that leaves the potential for more downside open. But if we rebound once again towards this 22 resistance area and we break above it, then we can be talking about a bigger rebound. So I think that Euro MXN also something to have in the radar, not a trade you should be taking now, but I think it should offer an opportunity sooner rather than later. I'm not mentioning the indices, by the way, because they haven't really done anything during the past 3 days. We're seeing a consolidation. The only thing I'm going to say by going over one of them, the S&P, which is the benchmark, is that I would still favor a continuation to the downside. Even if this is a correction, I would still favor another thrust lower before anything else. So I do think that this has a decent chance of getting resolved to the downside, especially now that we got an even worse fourth quarter GDP print, because the market has started getting worried about the inverted yield curve and has started monitoring any indications that are closely related to the economy. So this might prove to be quite significant for the rest of the day. Possible to talk about Euro Aussie, CAD Yen. I already covered Jason CAD Yen. Euro Aussie, yep, I can do that. I can show you Euro Aussie, and then we can talk about USD INR and the Nifty that our friend is asking for. So Euro Aussie, it depends. Sometimes that's why I prefer the daily charts, because if you see Euro Aussie on the daily chart, you will see that we actually held support and we rebounded from there. So there is no real breakdown. If you look at it on the 4-hour chart, you will see it looks like we had a false breakdown, but I prefer the daily regardless. So things are quite clear here. Below this channel support, I think we open up more downside. As long as we remain above, it's just a choppy consolidation. So I would be watching closely this previous low at 157.70. I think that if we breach this area, we should see some continuation, with 156 being the next area of support following that. Now, do I have a strong bias? No, I don't. Why don't I have a strong bias? Simply put, you don't need to be an expert here. I mean, we have an inclination higher, as you see in the general direction of the movement, but it's still quite a choppy area, right? I mean, the market isn't really in a rush to go anywhere. We've seen quite strong moves higher, strong moves lower, but at the end of the day, we're currently more or less in the middle of this large range. So, why would I want to get? Also, another testament to that is just look at the 200 and the 50 DMA, not only being one on top of the other, but also being horizontal. This is another signal that there is actually more or less no trend at the moment. So
like the euro.
Yeah, exactly. So why would you want to be involved with a market that shows no real trend? I mean, in my opinion,
you should be short palladium, for crying out loud.
So in my opinion, find something that has more of a direction and a better technical picture, and just go with that instead of euros. I'm not saying that it can't work out, but I'm saying that your chances are probably worse than getting involved with something different. Now, having to do with the USD INR, as we've said, you have to respect the upside as long as we remain in an uptrend, and this descending wedge so far hasn't proven to be some kind of an impulse to the downside. But we're currently in the middle of this, so nothing much to do about it. And now, having to do with the Nifty that our friend here was asking, here's the Nifty. The Nifty still moving to the upside. As I said, several days ago, it surprised me by breaking up from this, because this was looking like a beautiful corrective wedge that should have produced. I mean, from a technical perspective, the chances were that it would produce one more low before looking higher. But instead of actually doing that, it ended up breaking to the upside. So Nifty remains quite strong. Yeah, it definitely lacks the momentum that it had. You can see it clearly from here. So the momentum is not the same as it was, and we are now approaching the previous highs. So I would obviously not be buying it here, but you need to respect the upside as long as we remain above, let's say, 11,100, right? So that's it with it. Oh, the screen on your YouTube live stream keeps freezing. Okay, I'm going to transfer that to the team so they can check it out. Yeah, your guest today is called Don Coach.
Yes.
Okay, there is a
He's
friend here asking.
Yeah, I
Okay.
answered.
Perfect. I think I covered most of the questions. So go ahead.
Okay,
Enjoy
buddy.
the interview.
All right. So the third time's the charm with Crypto Don Alt. Looking forward to us finally having a conversation. Don, don't know if you're going to do it by phone or you figured out why this is the only platform that your mic doesn't work at, but I made you the presenter. Looking forward to hearing your voice. I believe I hear you, Don.
Perfect.
Oh, that is miracles.
Yeah,
Anyway,
really.
thank you, Don, for coming here today and being my guest to edify the faith community. I usually start off with, how did you get into the trading business? What were you doing before? And who were your influencers?
So how I got into trading was pretty much, I was interested in the crypto markets. I've been for a long time.
And waiting to see your screen, you can also share that.
Oh
now.
yeah, I can do that. But I mean, we're just gonna talk right now. So
okay,
but I
cool.
just put on like a Bitcoin chart. But
oh,
yeah, so
I see you're already commenting about what's inside my head.
Perfect.
All right, bro. So go ahead.
So, how I started out was pretty much, or like the reason why I started out was because I wanted to be able to move in like the crypto markets. Like that was my main motivation for learning trading. Because back in the day, like very, very early on in the Bitcoin history, back when it was like $1, my brother and I tried to buy some, but we didn't have a credit card. So it just like, we asked our mom back then if she could just give us hers, and then we just would pay her back. And she was like, no, internet money, let's not do that. And we were both like, okay, we're just not gonna. And then we watched price rally to 1,000 back then, which was like way back in the day.
Yeah.
This rally up here.
Yeah.
And we're both like, okay, shit, we missed this. Like we could have bought it for 1. Now it's at 1,000. There's no way that you can buy it at 1,000. And then it started going down.
Yeah, and I bet even 130 felt cheap when we all felt expensive. I mean, that we all kind of remember old prices, and then we get into new paradigms. And if you're still focused on the would have, could have, should have, it makes it very difficult for you to accept that the markets have changed. You may have missed a wave, but maybe that was just the first wave. So was that your conclusion?
Exactly. I was like, okay, if this went from $1 to 1,000, there's no way that like it doesn't do it like that. While it was going down, I was like, okay, there's no way it doesn't do it again. So I started like looking at the markets, but I didn't really think about trading too much. I just looked at it and then just tried to make up my mind, like looking at social media and stuff, if it was like coming back again.
Mm-hmm.
And I didn't really like feel the buzz until the start of like 16, end of 16, where I was like, okay, I'm seeing this all over the media again, and I'm interested. And by then, I already had like some experience, at least watching the market, knowing how it worked. And then I started out aggressively, like learning by pretty much looking at Forex, what the Forex people were doing, because.
Okay. Self-taught, Don, or were there any guys in the Forex arena? I mean, I've interviewed more than 1,000 traders over the years, and certain ones for me have actually opened my eyes to things that I'm currently integrating into my own intelligence gathering and the way I view markets. Was there anyone like that for you at this stage?
I was pretty. I feel like I was unlucky, but really lucky. Like unlucky in a sense, but really lucky in the end because I had like some really shitty ones, and
Okay.
that's pretty much where it started. And I was like, okay, this doesn't make any sense. What they're telling me, like, there's no logic behind it. And
Okay.
that's always what
What
I
were
look.
they, like, just, you know, for the heck of it, what kind of things were they trying to teach you? Do you remember, or you have a mental block now?
So, for example, like one of the guys was just like, okay, whatever you do, he was pretty much very different from my style now. So what he always did was just draw trend lines. And I mean, a lot of people still do that sometimes. And so it was like not super shitty, but he was like, okay, you have a trend line in here. And you just buy, like, this is very obvious. You should have just bought the breakout here. Not realizing, okay, you could have drawn a trend line down here. And then, like, there's so many trend lines that you could have drawn.
Great point. All right, that's the point. There's, you know, it's so discretionary how you draw a trend line, isn't it?
Yeah, and then that was pretty much like his entire stick, where he was like, okay, draw this, and then just pretty much like risk management. I feel like the most people are just really bad at risk management, and the way he taught risk management was just super shitty. That was like the first experience, and I went from like one to the other to the other. Like I've gone through a few, but the good thing in all of that was that I noticed, okay, everyone has like some kind of like point in some aspect, and I just picked up those points that I felt like made sense and made my own stuff out of it, and that worked for me really well. And then I went into crypto. And noticed that like I gravitated to like a horizontal kind of trading, where I was like, okay, it just makes sense that if like something was sold at $2 before, someone is going to sell it at $2 again. And that made a lot of sense to me. And then I went into the crypto sphere, and you can't really draw horizontals on this kind of like, this is where like I entered like, this kind of, where like, okay, you draw horizontal and you can buy like once the perfect retest levels, and then it just shoots up. But you don't really, like, there's not that many levels that you can draw on this chart. Right. And the only thing that you can
there have been plenty of levels now with the markets ranging. But when you have a blow-off market, very difficult to, you know, try and establish ranges, because that's what parabolic means, that every pullback shorter and shorter, and it looks like Niagara Falls up there. So, and so, you know, you brought up risk management, and most people were poor at it. Did you ever blow out an account?
What I did back in Forex was just that I stuck to a lot of just paper trading, and I blew a lot of
demo account.
Yeah, exactly. Demo account, paper trading, everything. I blew a lot of these early accounts, and that was pretty much how I noticed that they were talking shit, because you can't really tell, right? If you have never been exposed to trading before, if you don't test it, you can't really tell if they are like full of shit. So I tried the method that I got taught, and they didn't work. And so at the start, I blew up like several accounts on demo, but I've been lucky enough.
Thank God they were demos. So you're saying you never blew up a live account. And you know, there's something about demo, Don, and I know you're a teacher, you mentor people. Demo accounts people really don't take seriously, because there's no repercussions, right? You could just open up another demo. So what I like to tell people to do, and I'm sure you could do it in crypto, is like use the least amount of leverage as possible, because like in FX you could do a micro lot. And what I like about it is, even if someone has $10 worth of risk, it's better than nothing. And they kind of, you know, the money changes the equation psychologically for almost everybody. So just, you know, something. Okay. So what do you teach with risk management now, Don?
So what I usually try to stick with is just like the basics of the basics, where it's like, okay, you don't want to risk on every trade. Like the crypto people somehow like to risk 50% of their account on one trade, and then they lose it, and they're like, okay, shit, now I have to make it all back, right? And then they risk even more, if that's even possible, on the next one. And what I try to teach people is that like 2% of your entire trading balance, risking that is more than enough. You just need to be consistent with your approach. And as long as you're like consistent and your trading method actually works, you're going to be fine with that. And it all compounds, right?
Yeah, at least they have 25 trades, and they'd all have to be losses for them to get to a 50% drawdown.
Yeah, exactly.
Which is a lower probability than one taking you there.
Yep. I mean, one is, if you're so sure about like that one trade, at least that's in my experience, like when newcomers are so sure that something is going to work out, it usually doesn't, right?
Yeah.
If you come into a market and you're like, oh shit, this has been going up so much, it can never go down, or like this feels like it's never going to go down, like that's usually when it goes down, right? And
yeah. And the opposite. I mean, I've interviewed other crypto guys before this higher low we put in Bitcoin, and this recent advance. A lot of people were saying, "God, you know, there's hardly even any trading activity. I'm going to start trading Forex again." And that was the low, and that was the low in Forex. You and I talked about that. So, you know, I noticed a very interesting tweet that you put out, and it's right before this recent pop we had. You know, in commodities, I think they call it backwardation, but you were noticing something in the crypto space, and your comment was, I certainly would not be short crypto because of this. Okay, do you recall the tweet?
Yep. I recall the tweet.
What were you seeing?
Okay, so that was like the very recent drop that we had. This is for our chart. We had a breakdown of consolidation. Everyone was like, okay, shit, this is going like very, very low. And what I saw during this sell-off was that other cryptocurrencies like EOS, for example, look at this.
Wow.
This one. This was the same time, like this arrow here, this was where I noticed, okay, this is going up while Bitcoin is going down. And EOS is one of the coins that I look closest, like the altcoins that I look the closest at whenever something like that happens, because it's, I mean, I don't want to imply that
it's a tell. It's kind of like, you know, you look at, you know, you could use an analogy in the stock market. If a certain sector is leading, like let's say, you know, techs, small caps, while the Dow isn't doing much, it's an indication that, you know, maybe you shouldn't be short the Dow either. And because some of your, you know, the outperformance coming from a leading sector. So you use these altcoins as a market tell for the majors. Am I reading you correctly?
Yeah. Even like, especially if something like this strong move happens where you're like, okay, this is very interesting, because what happened in the past is that whenever Bitcoin started to drop, these altcoins dropped harder. And
right, I remember.
So what you can kind of look at is, okay, why is this not dropping? The only reason why it isn't dropping is because someone's buying it, right?
That's right.
So it's kind of a good sign that someone is buying, because in crypto you always have to look at two pairs. One is, in this case, the EOS Bitcoin pair, which describes like the relationship between EOS and the Bitcoin ratio, right? And the other one is, there's also the EOS USD pair. So what my point was, that I think that someone is using the Bitcoin dip as to buy EOS USD, and that's why the EOS Bitcoin ratio is going up. And yeah,
so you know what you're doing, Don. I mean, the title is you're doing intermarket relationships within one space of crypto, and you've defined different asset classes within the crypto asset class that give you market messages. I'd like to congratulate you on that, because, you know, a lot of people come in here and they'll start off like you did, you know, talking about, you know, they're the technicals, but it's a jigsaw puzzle, isn't it, buddy? And you have to, you have to look at all the pieces.
Yeah, I like to, for me, like whenever I only look, like if I only had one chart, if I only had the Bitcoin chart in front of me, I would have major difficulties being able to tell where it goes. Whereas when I have all the other altcoins, I can kind of make a case for like something like Bitcoin going up or down, just how the altcoins react. For example, like what I did back here in January of 18, right before the big drop, was the altcoins, they all went up. So I've been doing this for a while. Back then, the altcoins were all going up, putting in like 100, 200, 300% in a day, right? And crazy times. Yeah, it was crazy. But what I saw was, one, we had that big euphoria at the top, right? We had this massive rally from.
You know what else we had that didn't work out? A futures contract on Bitcoin.
Exactly. Yeah, at the top.
So you can, well, not only that, I remember doing an interview and saying, I bet there's a lot of guys in Chicago salivating for this to short it. And, I think that's what happened. I think the contract's going away, though. Maybe that's bullish.
Going
Bitcoin.
Away.
Okay,
yeah, so I made a tweet about it too.
All right. So go ahead. I interrupt a lot.
No worries. So what I did back here was I noticed the altcoins were all going up. Like real life friends were telling me, okay, what should I buy? What should I buy? The entire world was bullish crypto because the altcoins were going up, but Bitcoin looked kind of shitty, right? We had that 20 to 10K drop in pretty much like a week. And then we had a lower high put in that got confirmed. So I was like, okay, Bitcoin's looking pretty shitty. Altcoins are going up. What does that mean? Like, if everyone is buying in because of the altcoins, why is Bitcoin not going up? Because there's huge demand for Bitcoin from like the general population.
Okay. All right, let me stop you again. So in this case, altcoins blowing off while the majors were starting to get tired was a sign of excess speculation. So why isn't it now, with the altcoins going up and the majors being the laggards? I could see how you used it up there. It's kind of like the real speculative stocks near the end of a move, will blow off while, the blue chips aren't. So why is it different now that it's not an indication of maybe some euphoria coming into crypto prematurely, if this isn't the bottom, that altcoins are doing what they're doing while the majors are just moving sideways?
That's a really good point, and something that I've been thinking about a lot, because what I like to do is look for these extreme altcoin movements at like Bitcoin tops and bottoms. So
now you have a different scenario here.
Yeah, it's different, but I could still see this like the altcoins exploding some more, Bitcoin going up a little, and then just really, really dropping like back to the lows again, catching everyone unaware. But yeah, I feel like we have to make a distinction between like back here where altcoins were like super, super expensive, and now they're like 95% down, right? Across the board, you have the altcoins being like, okay, if like Litecoin was, we can look at Litecoin, for example, which has put in like a huge rally.
It also way outperformed Bitcoin on this recent rally.
But yeah, exactly. But you've had like from the top to the bottom in USD terms, you had a 93% decrease. From 300, this is even more. It's actually didn't, but yeah, 94, 95, whatever. From 300 something to all the way down to in the 20s. And I mean, if you just sold somewhere up here, you can easily buy back 10 times as much as you can as you sold, right? So I feel like there's definitely a case to be made that they're just super cheap, and it's really easy to buy a lot of them because they're so cheap. And yeah, that's just like Litecoin, for example, has been outperforming the market ever since December.
Right. Why?
And that's I'm
sure the reporters are giving fundamental reasons, like they're going to be used here, or they have a new contract here, or there's a dog and pony show going on everywhere to promote it. What's the crypto world saying about Litecoin's outperformance? Are they giving fundamental reasons for it?
Yeah. So what Litecoin, what a lot of people talk about right now is the Litecoin halvening. Do you know about like how the halvening stuff works in crypto?
No. Or I mean, I eat with all of these things. Or how about this, Don? I thought wallets were made out of leather. Right,
not
so
in all cases.
Educate, someone from the old days.
I'm not the best kind of guy to talk about the fundamentals, right? Because I'm very much a trader. But the halvening is in crypto. You get for mining, you get block rewards, right? Whenever you crack a block, if you will, you get a reward. And Litecoin, I think it's this year in a few months. Actually, I'm not 100% sure, but I think it's like in 4 months. Is reducing that block reward, which means there's less new Litecoin coming into the market, and people assume
supply deal. Yeah,
exactly. People assume the demand is going to stay the same, but the supply
got it
is going to increase, and that's pretty much all of it.
All right,
and even more so for me, like in crypto, like the technicals matter way more than the fundamentals, because it's so difficult to judge, okay, is this actually worth something? Because I honestly, like in most cases, I can't tell.
Yeah.
So I just trade the technicals and stay away from the fundamentals most of the time.
Okay, cool. So you have any technical viewpoints on some of the majors where we're sitting right here, and maybe projecting or biases that you have?
Yeah,
Go ahead.
I can talk about, I'll start with Bitcoin, because everything starts with Bitcoin. So what I'm watching right now for Bitcoin is this kind of trading range. You've had this low put in December, and then you had a higher low in January. And the similarity of this move, like this year, to the one that we had last year, just inverse, is very striking to me, where you had, like, you put in a low, and then you retested it again.
That was a descending triangle, and currently we're in an ascending triangle.
Exactly. And if this breaks out, there's really not that much resistance up here, like where I have empty space. Like this is like there's nothing on the way to 6K.
I don't think the breakdown, huh?
Yeah, I don't think it's gonna go like straight to 6K, but I could see like a strong rally up there, like to 5.5 or something. If it broke out, just because technically there's really not that much resistance, and you also have like just on the biggest exchange pretty much, which is BitMEX, you have like an insanely high open interest. I don't think it's actually ever been higher, but I might be wrong on that one. But it's like it's really high. So if this goes, it's gonna go hard. But I think like the same could be said for the downside, right? So we're still at resistance. We've been knocked down by this resistance several times, like in here, and now again up here. So if this rejects, there's really not that much support on the downside either, other than like all the way back to 2.5, like the low first, and if that goes, I think like all the way to 2.5K. So there's no need to be like super overly excited, but I think that doesn't really look too bad. It's very similar to the breakdown.
It keeps knocking on the door. One day it may open.
Yeah, exactly. Even if it retraces, I've been saying, for me, this kind of movement in general is bullish. I think like putting in a trading range after like this kind of drop,
especially
nice.
The first higher low, I think was that's what caught my attention, was when we put in a higher low that was at 78.6 back there. So that was a tight risk trade. You buy 78.6, you're wrong under the low of the move. So I concur with you. What a great interview, buddy. Is there anything you wanted to wrap it up with?
Nothing much. I mean, I think like the crypto market is super interesting right now. I can only recommend to look at it. Not only Bitcoin, but also like the other majors that I haven't talked about. Everything looks kind of interesting, and I feel like the buzz has left the space. So that's always like a good sign, if you will.
Yeah, you're a grave dancer now, Don.
Exactly. And that's what you want to be as a trader, right?
Right. Exactly. So, I know you have a business model. You have a lot of followers. People were very excited to come hear you speak today. If you'd like, this would be a good time. I tried to pull it up. You could show your website or the best way for people to reach you.
So the best way to reach me is by just writing me on Twitter. I actually haven't monetized this entire Twitter thing.
Okay.
So it's just I just do it for fun, and
All right.
I'm gonna start a newsletter with a good friend of mine that you also know, Crypto Cred.
Oh yeah, great guy.
So yeah, that's coming in the next 2 months. But until then, just check my Twitter for updates.
Okay, well, I'm going to nominate you for the Nobel Peace Prize of Humanitarianism until you start charging for giving, as far as I'm concerned, some very rational and prudent views of a dangerous game unless you're prepared and have the armor to survive being in the arena. And really, Don, you're now, like I say to people, you're my trading warrior brother.
Thank you very much. Appreciate it.
Yeah, it was great having you. I'm glad we were persistent. As a trader, you have to be persistent. So why give up on doing an interview just because we got stopped out a couple times, right?
Right, yeah.
All right, buddy. Well, it's my hope that pips rain down on you, and keep up the good work, and look forward to you and Cred doing something. Maybe down the road we could have you both on and talk about what you're doing in the space. How's that sound?
I would love it. Yeah. Thanks for having me. Appreciate it.
It was a pleasure. Thank you for edifying our community today. I really appreciate it, Don. And that's a wrap for us, everyone. And we'll see everyone for TGIF. As I always say, don't just count your pips, count your blessings. See everyone tomorrow. And follow Don at Crypto Don Alt.
Thank you. Bye-bye.
See you later, Don. Adios.